Joining us now, Mia and Angie, and I guess Jim McCafferty, Asia Research Product Manager at RBS. Breaking news story here, big day for the RBI there in India. Well, the Indian economy is not looking as robust as it did 6 months ago.
Possibly not, but I guess it's a relative game right now. People looking at the EU, and the EU is going into recession. Therefore, any kind of safe haven currency will be a beneficiary, and I think that's what's happening right now.
Would you call the Indian rupee a safe haven currency?
Well, I think it goes back to relativity, and I guess, with France going into recession right now, and possibly, Germany with the impact of the euro, then people are looking for other attractive assets. And looking at India's fiscal state, it's in better shape than Europe or the US. So I guess,
we were talking about it all week, and with you being Asia Research here, if you were to take away Europe headlines and the United States, really those are the news headlines that have been driving the market since 2008. If you take those headlines away, what would the headlines be here in Asia driving markets today?
Okay, well, we look at the domestic economy, and if you look at some of the China consumer staples, for example, they've been doing really well, and actually valuations are quite demanding. We hosted a conference last week. We had 75 companies representing China and Hong Kong, and those companies were relatively cautiously optimistic about next year. So domestic consumption has been fairly robust in China, Hong Kong, and that's the key takeaway, I think, outside of what's going on in the EU and the US.
You've got a thesis here, Jim, saying we are entering the year with considerable uncertainty, but the world will muddle through.
Well, that's what we're thinking. Going out
based on a meeting with the Chinese, we're quite upbeat, but clearly France saying that the UK deserve a downgrade before they do.
Remarkable, that was, wasn't it? That was just incredible.
Sarkozy calling Cameron an obstinate little kid. There's anything really happening about it.
Those are fighting words,
Waterloo, Trafalgar, Ypres, we can go on with these various victories for England.
Well, I guess if you're a portfolio manager and you want to be exposed to Asian growth, but you don't want exposure to the US or the European economies, then you tend to avoid countries like Taiwan and Korea. These are,
is that actually possible, though, really? I mean, you're saying that the world is so interconnected now that, if you want to try and avoid exposure to Asian and, to Euro and US issues, I mean, you have to bury your head in the sand, wouldn't you?
Well, I mean, some stocks, for example, are very much domestically focused in China, for example, supermarket companies, for example, which are purely reliant on domestic Chinese consumers, some of the retail operators, but these are on quite demanding valuations. So the market's already telling you that investors want to be exposed to those stocks. Otherwise, you look at the Korean shipbuilders, for example, they're trading on 5-6 times earnings. That's because the market's very much aware that they are very exposed to what's happening in Europe and the US.
I want to talk about investors' demand for new stock. Clearly, this week was not an optimistic week for Hong Kong IPOs. If you take a look at this year compared to last year, 2010, about 80% of the value has been out the toilet. But looking forward into 2012, what is your forecast in terms of companies either thinking about listing and really getting their funding back?
Well, I guess it's about appetite for capital. There's two ways of financing business. There's debt and there's equity. And equity generally has been seen as cheaper in the past, but right now we've got fairly low interest rates. It's just that banks are not willing to release the capital to companies.
Well, also with the other debt issue, if you want to actually raise corporate bonds or whatever, I mean, you've got to look at a developed market, a developed secondary market, and we don't have that yet in Asia, do we?
No, we don't. So the equity market will always be an attractive proposition for these companies because you can come back, raise more capital, you can incentivize management, lots of good reasons for raising money. The question is, at what valuation? And company management are they're quite savvy. They know what these businesses are worth. And trading on 5-6 times earnings, they don't want to give these assets away too cheaply.
So put a number around all this. The head of Hong Kong Exchange, Ron Curley, said between 80 to 90 IPOs next year. What do you think? Is that high?
I mean, it's not the number of IPOs that matters. It's the amount of capital being raised. So if you do 90 IPOs raising $10 million each, it's immaterial.
The $8 billion this year means nothing compared to 2010.
We've also heard, Mia, that a lot of the investors' sentiment on Shanghai, when a lot of these IPOs were coming online, we saw the markets drop that day because there was fear that there was just too many players in the market for too little dollars.
And too many unproven business models in the Chinese economy there as well.
If you put all your money, I just had a chat with Paul Darby from Jefferies earlier on, and I asked him, if you put all your money, all your family's money into one area, where would it be? And he sort of
It's a big call, isn't it? I mean, does he have to do that?
Well, no, he did. He didn't have to do it. He didn't have very much money, I guess. Swiss equities, because the Swiss central bank has got it right.
Well, the Swiss franc's very expensive, though, isn't it? And I think the Swiss economy is struggling in a sense, and they're having to think about depreciating the currency. RBS's view right now, in terms of Asia, is China.
And your money.
It's China. And our money. RBS's money. I think China is the engine of growth for this region. We're still looking at 8.5, 8.6% GDP growth next year. Yes, big exposure to the US and Europe in terms of trading, but nonetheless, you've got strong domestic consumption and actually in control of inflation as well.
But Jim, we heard today China's treasury holdings dropping. We heard exports this week dropping on slowing demand manufacturing in the US, right?
Yeah.
I mean, are those headwinds that you're worried about? It doesn't sound like
Well,
it.
I think people are looking at GDP growth, and we're talking about GDP growth of 8.5, 8.6%. And what we're seeing is a reorientation of GDP in terms of the composition away from net exports, which it's been driving China for the last 20 years, towards domestic consumption. We had a 12th five-year plan which came into place in February 2011, and the five-year plan was all about giving the domestic consumer more confidence to spend. So better provision for healthcare, better provision for education, unemployment benefit, and that means that big domestic savings pool can actually be spent on consumption.
We saw those pictures, though, coming out of China. Protests, social unrest. I mean, if you're talking about personal consumption growth, you're talking about rising wages, labor. There's labor unrest right now, aren't those?
High youth unemployment.
Well,
right?
we do. We have 9% real wage growth in China. So yes, we've got inflation at 5%, but real wage growth is actually still positive. So to a certain extent, this is a big economy. It's 1 billion people. But I think the Chinese authorities have actually handled this pretty well.
John?
Silence is quite golden.
Taking it in, absorbing.
Jim McCafferty's hanging off the word, you know. Central Bank of the Year, please.
Central Bank of the Year?
Yeah.
I thought you said it was a Swiss Central Bank.
No, that's what I didn't say. That's what Paul Darby said.
It's not Bernanke.
No.
Glenn Stevenson are saying.
Not Bikini Faso.
It could be.
I mean, I really don't know.
I think our observation is, if you look at what's happened during the course of this year in terms of macroeconomic policy, I think China has handled things pretty well.
Like China, don't you?
Well, we do like China, but if you think about the major issue we talked about during the summer, it was inflation. Investors were so nervous about inflation, and now inflation's coming down, so we're back onto the concern about growth again. And we're still looking at growth which is above 8% for next year, which, look at it relative to the EU, look at it relative to the US, it's pretty impressive, right?
Jim, thanks a lot. Jim McCafferty there from RBS.